Good afternoon, everybody. My name is Microfinance, and as you know, I'm the CEO of Microfinance Australia. And I'd like to just introduce Roy Webster, who is the Step Up Coordinator for New South Wales ACT and Queensland for Future Microfinance. And what we're going to talk about, we have an hour available for us. The purpose of that is really to make you aware of microfinance numbers and to I have muted everybody because we're hoping to run this as a webinar rather than and we're also not encouraging you to put your webcams on, because otherwise everyone will pop up all over the screen. We will have a few slides, PowerPoint slides, throughout the presentation. But by and large, what I'll be doing is I'll just be asking some questions. And I'll encourage you, if you can have a look at the right hand of your screen and look down, there's a chat function there where you can type questions throughout the presentation, which I will then convey to Joy, and we'll have a discussion about that and see if we can answer those questions that you might have. The other thing to mention is that we are recording this, so it will be available to people afterwards as well. We'll hopefully make that available through our YouTube channel. So looking forward to having about 10 to 12 people online. I think there's still a few people to arrive, but I think we should probably make a start. And as I said, you know, the purpose of this webcast is really to look at the ways that existing not-for-profit financing can assist clients of home modification services to access funds for client contributions if they don't currently have sufficient funds to cover this, and how home modification providers can increasingly work with no-interest loans and step-up providers to make finance available to clients if required. And obviously throughout the presentation we'll be making clear what we mean by no-interest loans and step-up. So just by way of introduction, I think we all know this, that home modifications are very different to other service types that are provided to older people and people with disability. Firstly, they're done for the benefit of the client and often for their family too, but they're done to the home in which they live and not to them themselves. Secondly, by and large, they tend to be one-off in nature. They don't involve ongoing support services coming in. Thirdly, done well, they can actually mean that additional service might not be required ongoing. And finally, and probably most importantly, they usually involve a reasonably sizable one-off financial contribution from the client. And this is different from the regular fee paid for ongoing service delivery. So home modification providers have been careful over the years not to disadvantage clients who are not in a position to pay for their modifications and have offered options to pay back client contributions over time. So leaving aside for a moment subsidizing those clients who cannot afford to pay at all, repayment arrangements over time have required additional administrative work and have been difficult sometimes to follow up given the focus of our work is primarily upon the delivery of home modifications and not necessarily upon finance. So I think the three issues that I want to raise with Joy today is how could financial experts in not-for-profits assist people who really need to have home modifications to make their home safer and to increase their independent functioning, to make the choice to have these done when it may result in a financial cost to them personally. What products and support are available to them to help them manage these debts? And how can home modification providers work best with Good Shepherd financing and other no interest loan scheme providers and low-cost financing product providers to facilitate access to funds which will enable them to have their home modifications done. Now, as I said at the beginning, any questions that you might have, please feel free to type them in, and I'll be watching this screen like a hawk throughout, and I'll be putting those to Joy. But I'll hand over now to Joy.
Hello, how you doing? So I'm Joy. I'm from Good Shepherd Microfinance. I've been working in this microfinance space for about 5 years now. Originally, I was a service provider, so meeting one-on-one with clients in one of our partners, and then I moved into this background role where I do sort of training, policies and procedures, creating awareness, that sort of thing. So where did we come from? Good Shepherd was actually founded by a nun in 1835. She was quite feisty. She was a lady who really had a passion to go for the most lost and the most disadvantaged in society. So a lot of her work actually began working with prostitutes in France, and then finally that spread out to Australia about 150 years ago. So if we fast forward a couple of centuries, in 1981, the first no-interest loan scheme was founded, and the real need for that was that Good Shepherd had community workers, and they were trying to help people overcome the situations that they were in, but they found that they couldn't even afford just basics like a fridge, so that they could move past the difficulties they were facing. So they came up with this idea of a loan because they wanted it to be something that builds up the dignity and the capability of the person, as well as getting them the item that they need. So I've brought along the 4 principles that they originally came up with, and essentially we still have the exact same principles that guide us today. One is to make the money available as a loan, not as charity. Second is to show respect for clients by entering into a professional agreement, so they have to sign a loan agreement. Thirdly, educate clients about finance, about loans, and make things really easy for them to pay it back. And the 4th one for the no interest loan was to charge no interest and to encourage people to return the money so that their friends and their neighbours in the community could actually pay it back. So back in 1981, the Good Shepherd decided to, Sister Mary Fraser, sorry, that was the, so back in 1981, the nuns invested $20,000, and basically a lot of people on the boards and things said, you'll never get that money back, just kiss it goodbye. But they said, no, we believe in it, so they put the $20,000 in, and lo and behold, the money did actually come back. And after that, they could lend it out again, and it came back, and they lent it out again. And essentially, 35 years on, that $20,000 is still in the pot, being cycled and cycled. So nowadays, Good Shepherd Microfinance is actually quite a big organisation.
Sorry, do you want me to put the
slides yes, on? Thank you. We've just got a slide coming up. Hopefully you can see that. What we do is that we don't actually deliver the services on the ground. So we have partners. We've got 660 locations that the NILS and the step-up loans are being offered from. So I've just got a slide there about our purpose. So it's really to enable economic well-being, however that person defines it, and resilience for people on low incomes, especially women and girls. And the vision that we're wanting to achieve is fullness of life for people, which I think is really in line with home modifications. So we've got some of our partners there, for example, the Salvation Army, Uniting Care. Our delivery partners really are the life of our NILS program. Just going to switch, hopefully I can achieve this, to the next slide. Great. Hopefully everyone can see that. I'll just take you through what are our two different programs. So it all started with the no interest loan scheme, which is for a small amount, so it's $300 to $1,200. It's essentially no interest at all, no fees. You pay back exactly what you borrow. It's over 12 to 18 months. And to give you an idea, it's about $30 to pay off a $1,200 loan over 18 months. So that's NILS. We have a step-up program which is about 12 years old now, and the idea was that we were getting a lot of feedback that the $1,200 wasn't really making it for a lot of our clients. So we thought we'd put the step-up, which is a little bit more money. It is a partnership with the NAB bank, so it goes up to $3,000. Again, it's got no fees, but the difference is it has a low interest rate. So it's 5.99% per annum, which if you compare it to a home loan, it doesn't seem like that good a deal. But if you compare it to a payday lender, for example, that's normally 280 to 350% interest. Wow. If you compare it. So yeah, it's Step Up's still really fantastic deal. Repayments are over 3 years, so the actual amount that they pay is about $42 if they got $3,000, and they pay that every fortnight. I've got a few pictures of some of our loan purposes, but in terms of this teleconference, I guess it's about the home modifications, and definitely that's something that we're really passionate about.
Sure. Joy, I mean, obviously, the two loan products you've put down there, I mean, obviously the main benefit is people having access to finances relatively straightforwardly, and obviously people who might have difficulty in going down traditional routes of getting those finances, and presumably also having much better and fairer rates of repayments as well. But are there any other benefits that you would say clients have? What other services do you provide? Because I know you're in the business of providing support to people who have got some financial difficulties, and it's not just about the money, is it?
No, that's right. So almost 100% of our clients would have a Centrelink card or a Centrelink benefit, even if it's just family tax benefits. So besides getting them the loan, our community workers are really trained to look at a person's situation holistically. And I came across this case study which I thought really expressed it well. So it's from Robert, who's a client up in far North Queensland, and Julie, his caseworker. So I'll just read you out in their words. So Robert says, "I'm a pensioner now. I would like to work, but no one wants to employ me. I'm over the hill, I guess. So for me, having a car is very important. It makes me independent. It also saves me a lot of time. I can go anywhere I want, whenever I want. I wouldn't be where I am today without a car. I wouldn't be happy. Financial organisations around Australia have made it very difficult for low-income earners to have a loan or borrow money to meet their requirements. But we all have requirements for making life a little easier." And Julie, who's the blonde lady you see in the picture there, responds and says that these programs change people's lives, not just by making essential items possible, but by helping keep vulnerable clients away from payday lenders, which is what I was talking about with the 280% interest, or paying 5 times as much as what you borrowed is quite common. The hardest part of my job is saying no to clients when you see that they are really in need, but you have to say no. That they rarely leave with nothing though. I can go through their bank statements and make suggestions where they can avoid fees or save some money. Some clients act on that. They sort themselves out, and when they come back with their finances more streamlined, I'm able to take on a new application to the loan committee and show that they've taken my advice on board and followed through with it. I can also help when they produce their income statement from Centrelink. I can see if they're getting their proper payments. Robert was someone who took on my advice. I could see he was prepared to work with the program. I really admire his honesty and commitment. In this job, I really enjoy building the relationships with people, and Robert and I get along really well. I probably do a lot more for clients than I'm required to, but I can't let them walk out of the door when I can see that they're being ripped off. You find that if you don't do anything about it when you have them in front of you, once they walk out the door, you may never see them again. So Julie's one of the workers that I work with, and she's really passionate about getting people the information that they need, and really putting things back in control of the client's hands.
Okay, so that's covered off some of the really basic aspects of the program and the products. I'm looking around to see if there are any questions that people might have at this stage. I'm not seeing any. As I said at the beginning, I encourage you to type questions in. I can see them pretty easily when they come up. So I might just carry on. And at this point, I was made aware when I and the other staff from MOD.A attended the NILS National Conference in June this year that as much as you are very well distributed across the country, you kind of have identified that you're not having as much impact as you would like amongst older people. So people who are on pensions and what have you. Obviously that's one of the reasons why we thought we would make contact with Joy and see if there are any sort of barriers or problems about using these products for home modification. So we've certainly come up that that we haven't found anything to stand in the way yet. But so I thought the next part we would just maybe tease out some of the issues around home modifications a little bit further. And I have noted, thanks, I've got a couple of questions there and I'll just keep them on hold for a moment. One of them is to go back to a previous slide, and we'll certainly do that in a minute. And the other one's about larger loans, which I think we'll talk about shortly. So look, two of the main features of the new Commonwealth Home Support Programme is the cap on Commonwealth subsidies for home modifications of $10,000 annually, which in New South Wales represents a fairly significant reduction on what was possible to be funded in the past, but in other states and territories it represents potentially a more generous subsidy. The other aspect of CHSP is the greater focus on increasing the client contribution nationally from around 10% to 15% for services generally. Now, for home modification providers, it's been a fact of life that client contributions have been collected over the years. And in New South Wales, there remains a detailed fee schedule for clients with disability under the age of 65. So in terms of finance, we have a number of scenarios. We've got a lower subsidy than in the past, which may require a greater level of client contribution for significant structural modifications, and potentially then a lack of funds, client funds, to cover this. An opportunity in some states and territories for clients to have modifications done with that subsidy, but again, a lack of available finances to take advantage of that opportunity because of the client contribution aspect. Continued difficulty experienced by some clients in allocating any savings at all in that one-off nature to the cost of modifications, both major and minor. And coverage, I think, of the shortfall of contributions for clients who may wish to pay all of their contributions but only have a portion of it available. So thinking of those things, I mean, those to me seem to be the main scenarios. So do you believe that Good Shepherd and the other providers currently have loans? I mean, do they provide loans currently who require finances for home modifications? And do you think, though, that your products would be suitable?
Yeah, I was having a think about this, and we certainly do lend quite a bit to people on the age pension, so the elderly, particularly for Step Up, because for a mainstream loan it's very difficult to get one if you're over the age of 70. But although I can think of countless case studies where people have gotten their motorised scooters or their dental work, or gotten something else for the house or a car, I can't actually remember a case study in the last 5 years where someone had gotten it for home modifications.
Right.
But I wonder if that's an awareness issue, that perhaps people that you're coming in contact with have previously not been in contact with other social services organisations, and so they may not know about the NILS or the Step Up program. One of our real challenges is that although the need is about 17% of Australians are financially excluded, so can't rock into a bank and get a loan, unfortunately only 2% of those people know about us, although we've been around for about 35 years. So that would be my guess, that there may be a lack of awareness in terms of the home modifications. Yeah.
Okay, and obviously you have experience in working in communities where a number of people experience financial hardship and disadvantage. Do you see these products still being appropriate and useful for people who want them for home modification purposes in those communities?
Yeah, so the beauty of the NILS and the Step Up is that they are provided by local organisations. So, for example, the lady I was speaking about, Julie, is based in a homelessness organisation up in Cairns, and so they have a whole series of other services that they can wrap around someone until they get to the point where they are eligible for a loan. Another situation is where someone might come in, and although they don't have the money for their home modifications, but there's actually a host of other issues that the person's facing. They may be facing their electricity being turned off, for example, because they haven't paid the bill for 6 months. So our workers really have all of the, people to contact on their quick dial, and they can put them quite quickly in contact with the right sort of people. So yes, depending on the stability and the situation of that particular person, it can take a little while before they're ready to take on a loan, because one of the things we really do believe in is not giving a loan and demanding it back from someone who could never afford it in the first place.
Okay, so I'll just put back, one of the questions came in, can we please put up the second slide again? So hopefully that's coming up onto your screen shortly. So that's just a reminder of the products that we've been talking about. If a person requires around, say, $500 to contribute to a modification, which involves the installation of a grab rail or handheld shower, and they don't have these funds, how would they actually approach yourself or one of the other providers to see if they were, first of all, eligible for a loan?
Yep. So clients can just ring up themselves. We've got a few different ways of getting a person in contact with their local provider. We have 2 websites, which I'll put up on a later slide, but nils.com.au or stepuploan.org.au. Those websites have the eligibility and the information that you have in front of you. They can also ring our centralised hotline. So we have a phone number, it's 13NILS, NILS, if you spell it out, but it's 136457. Or they can actually ring directly. So if, for example, I think someone was here from Bellingen, and we have Bellingen Neighbourhood Centre that does NILS. So as long as they knew, okay, I'll ring Bellingen for my no interest loan, they can just pick up the phone or pick up a brochure and ring them directly.
Okay. And The NILS and step-up loans are for relatively small amounts. I know they're quite significant amounts, but relatively small, especially if you're looking at a home modification that's worth $20,000. But could they still be used to pay a portion of a larger contribution for a more significant modification?
Yeah, that's probably the answer that we would come to. So our limits are quite set. The $1,200 or the $3,000 is our upper limits, but we do definitely encourage clients, if they have additional resources, to put them in, or perhaps a family member could help them out. So one of the questions was, can they get a higher loan limit? And unfortunately, at the moment, the highest we go up to is $3,000. The reason for that is really about affordability, because if you start paying off $4,000 in 3 years, it becomes quite onerous on someone. The other way of looking at it is that a mainstream personal loan starts at $5,000. So we were really trying to target that gap in the market where people don't need a major, finance, $10,000 or something, but they just need something small.
Okay.
Yeah.
Now looking at that slide again, it mentions terms there, and one question's come in: does the microfinance organisation determine the loan term in consultation with the client, or is it like the limit? Is it a set term based on the amount?
Yeah, definitely. So they would set the term themselves. Generally, once the interview is well underway, their client has a budget sorted out, and then they can say, okay, well, you have, it looks as though $100 a fortnight left over before your next payday. Would you be comfortable in paying $30, in which case you paid off over 18 months, or a bit more, in which case you paid off over 12 months? So it's always at the discretion of the client, and we also do encourage them, if they do want to pay it off quicker, they can always come back for a second one after that. So some people may sign up for 3 years, and at the end of 1 year can foresee that they've got another expense coming up, so they'll quickly pay it off and then reapply for the step-up loan.
Okay. All right. So hopefully that's explained both the limits of the loans and the terms. I think we'll probably have to put off for another day how we would assist clients around the much higher levels. I think that's probably different products and different groups, but certainly you've explained how those products can and should. There's certainly no barriers as far as I can see for people accessing them, but we've never actually done this really. We never put it into practice. So one of the questions I put to Joy before we started was, well, how would this look then, do we think, if we were to apply this to a home modification scenario? So maybe you can step us through this particular slide, Joy.
Yeah, sure. And I'd really love some feedback on the text line as well. If there's issues or something that you can see where it wouldn't work. So the very first point, I guess, is that the client needs to know about these loans before they can even inquire. So that's where we were hoping that perhaps a home modification provider could mention it in an initial conversation when a client might express some concern about not being able to pay the $2,000 or the $3,000. It's really just building awareness. And if people feel comfortable, we're going to circulate some brochures on the email so that you can just have that kind of in your toolkit. The second point is where the client will then call the provider and be booked into for an interview, and they'll generally need to bring with them either an invoice or a rough quote of the amount so that the loan term and the repayments can be sorted out. So that's where the home modification provider could come in again. They'd either provide the invoice for the service or at least give some sort of rough guide as to how much it would be. The person then goes through the interview, submits their budget and their application, and it's taken off to an independent committee. So for NILS, it's an in-house committee generally, and for Step Up, it actually goes to the National Australia Bank. For Step Up, there's a credit report check at that point. So if someone has a default that it's unpaid and it's over $500, the answer will come back that it's declined, but then the worker has time to work with that client to resolve the issue, and they can reapply within 90 days, or they can reapply at any point after that as well. So once it is assessed, if it is approved, the client will be told, and for NILS, they'll go back to the organisation and sign that loan agreement. For Step Up, they'll go to the local NAB branch and sign a personal loan contract. But at that point, it would be great if the home modification provider, if they had provided a quote initially, at that point is where the invoice would really be necessary, because the money is never made out directly to the client. It's always made out either in a check, or some NILS providers can do EFT transfer as well directly to the service provider. Okay. So does anyone see any issues there with that kind of a process flow?
Well, certainly, I mean, it's something we're kind of just raising this for the first time with some of the members there. So we'll probably tease those out as the information sinks in. But I was keen to know what kind of things might render somebody ineligible. Because we're talking here about people who would be eligible and how useful it could be for people with small amounts that they would have to contribute. But, you know, what about those people? What is it that would make someone ineligible?
Yeah. So in terms of being originally eligible, it would just be if they have a Centrelink card and if they have lived in the same place for 3 months. After that, during the interview, it's assessed whether the loan's going to be affordable for that person. So one scenario would be where the person is already running out of money, so in between each fortnight they use all of their money, and their bank might be getting overdrawn, so then the bank's charging them $10 overdrawing fees. At that point, we would have to say, look, us taking an extra $40 away from you every fortnight isn't going to help, and it may in fact push you into further hardship. But that's where I was saying it's a conversation that we have, and a lot of clients do, you know, discuss and engage with it, and they go away, they rethink their budget, and then they come back and can reapply. So it can be a bit of a discussion process, but really our ethos is that it's safe and affordable finance for people. So really it would be any time where we thought, look, this loan isn't going to be safe or affordable for someone.
Okay, now we've got an interesting question there, if I'm reading it correctly. Can clients have multiple loans if they need service across different time periods?
Yep, so you can have a NILS and a Step Up at the same time. It just depends on the person's budget, because that would mean they'd have to make 2 loan payments. You can't have 2 NILS or 2 Step Ups at the same time. However, once you've finished your first NILS, you can go back for a second NILS, or again, if you've finished your first Step Up, you can go for a second Step Up. But definitely, if they're just finishing off or halfway through a NILS loan and finds that they need a Step Up loan, that's fine. You can have NILS and Step Up simultaneously.
Okay, thank you. And there was another question, just making sure that there will be brochures that either can be downloaded or we can make them available. We'll certainly, you were suggesting that we might be able to distribute those electronic brochures to
definitely.
people. So,
and if it's more the NILS that you'll be referring to, I'd really encourage you to pick up the phone and ring your local NILS provider, because they often have their own brochure which is, you know, more suitable to the actual area and their process. We've also got a question about outlining the time between an application and an approval. So it can depend on the delivery partner. Some, it will be 1 week between an application and an approval, and some can be faster than that. For Step Up, we generally say if a person is ready with all of their documents and we submit it today to the NAB, they'll have an answer between 10 days to 2 weeks.
Yeah. One thing that I suppose impressed me when I was at the conference was that this was a very well-established part of the not-for-profit sector that's been in this, doing these sorts of things for clients for a long period of time. As you can see from the opening slide, there's extensive coverage across the country. And I guess you are bound by fairly strict regulations, regulatory practices, which require a certain level and a certain standard of operation. And a lot of that would be around, you know, the dignity and respect of clients and making sure that you're not getting clients into further bother and what have you. So can you talk a little bit more about the sort of standards or things that govern your practice?
Yeah, I guess some of it is regulatory, so particularly for Step Up, we're bound by all of the responsible lending requirements that ASIC, who is basically the policer of banks, upholds, but they're things that we believe in anyway. So, for example, if someone can get a cheaper deal and a more appropriate type of finance, then we're not going to upsell them. So if someone came through and was interested in Step Up, but we thought, well, actually a no interest loan might be more appropriate, we would make the referral down to a NILS loan. I guess the other things would be really making it clear to people how much they are paying and what they're signing up for, which is why instead of just a website or something, there's actually a community worker that goes through so that a lot of the people who are the most disadvantaged can still feel as though they fully understand what it is that they're signing up for.
The other thing that occurred to what struck me at the conference was there was an awful lot of discussion because it was primarily providers in this space who were present about a phenomenon that I guess we're all aware of, but it might not be uppermost in our thoughts on a day-to-day basis, which is about the payday lenders. You talked about it briefly earlier on, but it really is a big phenomenon, isn't it, for people who are financially disadvantaged, that they can get further and further into disadvantage because they are, I suppose, vulnerable to getting smallish loans, but at exorbitant costs. So this is certainly something you have very much in your sights, is to try and prevent people from using those kinds of products which are going to exacerbate the problem they've already got in the first place.
Yeah, I was just telling Michael before a story of one of our clients. She actually used to be a community worker herself, so she never thought that she would be sucked into a deal where it was a scam, but it turns out that she was. So she signed up to pay off a vacuum cleaner. I think it was possibly a door-to-door sales, and she paid $36 for 18 months, which she thought, okay, that's fine. But at the end of the 18 months, she got a letter saying, well, the barrel and the hose of the vacuum weren't included in the original purchase. And so she could either pay $36 for another 18 months or pay $990 to get herself out and own the product outright, which is just outrageous, because the only reason she was interested in that product was because she didn't have enough money to go out and buy herself, a $300 vacuum cleaner from the shop. So that's really our passion, that we know just from so many clients where they say to us, I wish I had known this, or I wish I'd known that this existed 5 years ago. And they're having their money directly taken from Centrelink. It goes to the bank account, and then these companies are direct debiting it straight out. And really, they're taking advantage of the fact that that person's on a low income and they're doing it tough.
And I was saying to Joy before we started, I mean, members have expressed to me over time that, I mean, they have a great deal of understanding of clients and their financial situation, which is why we have, as a sector over the years, been very happy to engage in repayment schedules and those sorts of things, just to make sure that people have access to the home modification, but also to make sure that they're not further disadvantaged financially. But I guess we pretty much know that in a few years' time, the opportunity to do that is probably going to get less and less as, if we move away from direct grants, for example, we're just simply not going to have the finances to be able to do that. So we need to be encouraged to know that there are other groups out there who have similar values, have similar concerns, and are keen to not render more vulnerable people who are already disadvantaged. Mm. So that was really one of the points of having this webcast today, is to just introduce you to the concept, to have Joy come and speak about what they do, and also just to impress upon you that they are well serviced, 669 locations across Australia. So I would encourage those of you who have been listening today to maybe go and introduce yourselves if you haven't already, and maybe enter into some dialogue about how it could be possible for people increasingly to access this if necessary.
And I just wanted to point out on one of the slides it had that we have a repayment rate of 95%. So I think that's just a testament to the fact that people on low incomes, they often do want to pay for things, or they have the capacity to pay for things. And what we find is that there's a lot of pride in the community where someone's gotten a loan and they've paid it off, and they know that that loan is going to directly impact the life of someone else, in Bellingen, for example. So yeah, there is a real, I think, empowerment in having people pay something off, work towards something, and then achieve their goal. I also just wanted to point out that for NILS, the payments come out through SensorPay or direct debit or cash, but for Step Up, it's mainly direct debit.
Okay. All right. Now, look, I'm looking down the list to see if there are any more questions. I can't see any questions at this stage. If you have one, please type it in frantically now, because they come up fairly instantly. If not, then I'd probably say that we've come to the end of the webcast. As I said, it will be recorded, so we'll put it up there on the YouTube channel, make it available through the website, and we will be communicating back directly with you regarding the information that you can then share with with clients who might need it.
Thank you.
And certainly would encourage you to engage with us, but also with your local provider as well.
And before we kind of log off, I just wanted to say thank you for all the work that you all do out there. I was reflecting on the way here that in our church we have a lady called Lynette, and she's an elderly lady, quite overweight, and a few months ago she had a fall, and that was on a Friday afternoon, and she basically just lay there until Sunday morning when someone realised that she wasn't at church and knocked on the window to see if she was all right. And I just can't imagine how horrific it must have been for her, waiting to see if someone would come and check on her. So if there's anything that we can do to help that not happen, we really want to be involved in that. Yeah.
Thanks, Joy. Well, thanks everyone for logging in. I hope that was useful for you. And as I said, we'll continue the dialogue about it, and we'll see you soon, next time. Thank you.
Thank you.
Cheerio.